Greetings, members one and all of the Salivation Nation. Well, another day of drops in gold and silver. Yes, indeed. So all the euphoria that we felt over the past couple of weeks is starting to fade away a little bit. But let's explore some of the reasons why. And also, I want to encourage you because that's not necessarily a bad thing. So let's find out exactly what's going on here. Yes, this comes to us from CNBC. Gold falls 1% on Powell's remarks and improved risk appetite. Gold fell 1% on Friday as upbeat remarks from Federal Reserve Chair Jerome Powell and improved risk appetite offset a weaker than expected U.S. non-farm payrolls report, putting bullion on track for a second straight weekly loss. The U.S. Labor Department's monthly employment report showed job growth slowed more than expected in August, with retail hiring declining for a seventh month. Powell called the jobs report consistent with a quite strong labor market, in remarks made at a panel discussion in Zurich, adding that despite trade uncertainties, he did not foresee or expect a U.S. recession. I'm going to stop there because I don't know if you remember, but earlier in the year, analysts were talking about that they didn't think they would see, in spite of all the indicators out there, or some of the indicators out there, that we would see a recession in 2019. So this just kind of confirms it. Keep in mind that the tax cuts are still in place, and there's still a lot of activity going on in the economy. Now, that does not say that there aren't people hurting or suffering right now, but by and large, the unemployment rate is still very low. In fact, we're still seeing lots of low unemployment, especially minority groups and women. And I think this is just something that is being kind of confirmed really by Powell. And, there's really not anything happening that's going to indicate that we're going to head into a recession right now. Now, obviously, I believe farms are being hurt somewhat by these tariffs, but if we can get the USMCA, codified, Congress approves it, I think that's going to be a big boom. Because you think about it, trade just does not occur with China. There's other trade deals that have been reached with Canada, Mexico, and who knows, maybe the European Union as well. We'll see. It continues and says the sell-off in gold was mainly due to the highly optimistic tone Powell delivered throughout this session. He was pointing out that the U.S. economy was still performing well. Markets were expecting it to be slightly dovish, said Edward Moya, senior market analyst at OANDA. Now, keep in mind that I want to qualify this and say that just because the economy is doing well now doesn't mean that it won't be in the future. And I said, regardless of politics, recessions occur naturally. It's just part of the natural cycle of things. And there's some pain there, but it's also a time to sort of purge out what's kind of causing it, and naturally for things to work out. We saw that in 1919, and by the early 20s, that kind of led to the Roaring 20s at that point in time. And that was a time when there's a lot less government regulation and all of this other activity that you see to try to pump the markets and the like. I mean, obviously the Federal Reserve was around back then, but it wasn't quite as big of a deal as it is now in terms of how that's happening with a lot of this liquidity pumping into the markets, quantitative easing, and really flirting with the interest rates and the like that they're doing now to try to pump the brakes on these types of things, or even move them. But, you look at it this way, now we have two things in terms of psychological levels that have a great impact on the economy, it seems like, or at least with gold and silver prices and how the markets react, and that is tweets from President Trump and statements by Jerome Powell, or, as I mentioned in a prior video a long time ago, Janet Yellen. She makes a statement and it has effect on the markets. Spot gold was down 0.7% to $1,508 per ounce after falling more than 1% earlier in the session. U.S. gold futures settled down $10 at $1,515.50. We'll look at the metals here in just a moment. The overall longer-term outlook for gold, however, remains strong, and it's going to be slightly choppy going into the rate decision in mid-September, Moya said. We'll look at that in another article that has a different outlook on that. The main reason we are going to see gold remaining supportive is the stimulus from the Fed and China's central bank is going to keep coming. Investors are not expecting a 50 basis point cut in the September Fed meeting, but they're expecting the talks to be there. Probably be a quarter point. So that's 25 basis points. Uncertainties around U.S.-China trade ties, fears of deceleration in global economic growth, and negative treasury yields around the world were further supporting bullion, analysts said. However, planned resumption of trade talks between Washington and Beijing and robust U.S. economic data on Thursday did reignite some appetite for riskier assets, pushing gold down more than 2% in the previous session. One move lower, like what we saw on Thursday, is not going to change the overall trend and what central banks are doing with interest rates, which over time is going to push gold higher, said Bob Haberkorn, senior market strategist at RJO Futures. Bullion has risen about 17.6% so far this year. Silver was down 3% at $18.06 an ounce following Thursday's 4.8% slump. We attribute the fall in prices to profit-taking following the steep price rises beforehand, Commerce Bank analyst Daniel Breserman said in a note. And that's speculation. That is where you can, if you play those markets right, especially in the electronic exchange-traded funds, you do it there, well, you can invest in silver. And there you go, profit-taking from it. But I believe the metal itself, when you buy it, you hold the physical, that's more of a hedge. It's more of an insurance policy. We do not believe that this latest correction constitutes a trend reversal, but see it rather as gold and silver prices taking a breather within an otherwise intact upward trend. I tend to agree with that, but I'm going to show you something in a minute that's going to counter that, I think, to a point. Palladium fell 1%, while platinum fell 1%, while palladium fell 1.2%. Still above gold there. Let's take a look at the prices before we move on to the next story here. And we can see gold down 0.9%, 1506.50. But look at silver. Silver was the big loser today, other than rhodium. Wow, rhodium is now 42.50. But silver is down 3% plus pi 3.14% to $18.15. So gold is still above that $1,500 level, but it's 1506.50. Now keep in mind, remember I did a video, sort of celebrating the $1,500 gold and the $17 silver. The silver has a way to move back to get to that ratio. But if we look at the ratio between gold and silver, we can see that it has increased almost 2%, 2.32% here. It's now 83.38 to 1. Now the high was around 93 to 1. Remember, it wasn't long ago, it was 85 to 1. So we're seeing that movement. I think as we see the prices go down, we could see that continue to move back. But this, I think, is proof positive, especially for the selling, that this was not in the bullion market. This is not in the physical. I believe this is all done with the ETFs, exchange traded funds, SLV, and the like. And I don't think we're going to see that silver bull until we see increased demand in the physical. How long will that take? I think that could take a while. I think it's going to be a tough road to go. However, I believe that the speculation and movement, if it were to continue, they would have shown silver's worth as being that hedge and as a wealth preserver. All right. Now, this article from MarketWatch talks about the timing. The sentiment is overly bullish for the gold prices here. This is very interesting. Gold short-term direction is down, according to contrarian analysis. This forecast has nothing to do with Thursday's big drop in bullion price. It instead traces to the gold timer's recent jump into the bullish bandwagon. From a contrarian perspective, of course, that means that the path of least resistance over the near term will take gold prices lower. I actually hope so, because I want to buy more of it. Considering the average recommended gold exposure level among several dozen short-term gold timers monitored on a daily basis, as measured by the Hubert Gold Newsletter Sentiment Index, the average jumped this week to 56.3%, which is higher than 84% of all daily index values since 2000. Prior to the recent jump, in contrast, as you can see from the chart below, the HGNSA SI stood solidly in the middle of the pack between early May, which is the bullion registered what so far it is at 2019 low, and earlier this week, the HGNSI averaged 24%, which is equal to its average level over the past 2 decades. And there you see the chart. This is remarkable since the normal pattern is for bullishness to the rise and fall more or less lockstep with the market. During this time of merely average bullishness, of course, bullion rose by nearly $300 an ounce. What to do? What do the historical tea leaves suggest is next for gold-related investments? The table below shows average returns over various periods since 2000, subsequent to the HGNSI readings that are at least as high as where the index stands now. There that is. So, and it goes on to talk about this more, but I think the what's worth remembering here is it continues to say, even if contrarian analysis is right in its current forecast of a near-term decline, it applies only for the next couple of months. Okay, so gold may very well be on its way to much higher levels in subsequent years, but the contrarians are right. The path gold takes in getting there will take it to lower levels first. And that's just it. I think the overall sentiment is that, and I do agree with this too, gold did rise up pretty fast. And silver did too. And I think that's going to be one of those things where, whenever that happens, to be cautiously optimistic, and you got to let the prices marinate for a while before you can really truly celebrate. And that's kind of what the point was in my last few videos, with it going up. And also with it going down, we should not be overly concerned, because when it does this, these are natural market forces, I believe. I don't think there's any manipulation involved here at all. People taking profits and selling, that's perfectly legal. And seeing where there is an opportunity there, and they take advantage of it and do it. But the thing is that gold and silver act as they always have, and that is they are safe havens. And you see it time and time again. You go through any amount of videos where I talk about the markets, and you see that whenever the metals move up, it's because investors move more towards safe haven assets. And those safe haven assets are an insurance policy. They protect you in times of these economic uncertainty. And even if it's just for a short period of time, because you don't know what's going to happen tomorrow. And I think it's precisely why these metals prices go up, is because people can't predict the future. And so you go to these markets, and that's the thing about being prepared in terms of a financial with your portfolio. That's what gold and silver's about. And so you hold on to them. We hold on to them for the long term, and as ways to hedge and protect ourselves. And so that when it comes time to sell, if you're diversified enough and you lose out on silver or gold in terms of the actual currency value or price, which even in many cases may be below what you paid for them, hopefully your other assets have done well enough that you can take that loss, because they aren't investments. And that's the key, folks. Gold and silver aren't investments, which is why taking a loss on them should not be as painful as people say that, or people say. And I'm going to talk about this in another video. But when you take a loss on precious metals at the time of selling, and by the way, I hope that's a long time from now, if you don't pass it along to the next generation, if you're diversified in your investment portfolio in other areas, then those losses are more than offset by the gains in the other asset classes, the riskier asset classes. And if you get near retirement, you would have set yourself up for those cases where the gold and silver simply is an insurance policy. And when you sell them, if you have to sell these precious metals and you take that loss and it hurts you, there's a bigger problem at play. And that's the thing to keep in mind, because that's why that's the major reason why I don't call these metals an investment. Why I stay very clear away from that word. So that there's no ambiguity as to what their purpose is. So there you have it. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, post your thoughts below, people. And let me tell you one other thing too. I don't very rarely look at my analytics, but you click on that little bell, and it's actually starting to work now. I might even do a separate video on it, but you click on that bell, and as long as you don't swipe them away too much on your phone, you should get a notification of the videos that are popped up. There's not very many people that have done that. I think they fixed it, or getting close to fixing it. All right. Multitude of gratitude again to you all. Encourage you to please rate, comment, and subscribe.